a.m. in New York City. Good morning. I'm Danny Berger with your Bloomberg Brief. Here's what you need to know on this Tuesday. An evening of fear. A shooting in a Midtown Manhattan office building kills 5, including the gunman. Locking it in, the U.S. and EU rush to finalize details of their trade deal. Talks with China still ongoing. And investors await the latest JOLTS job data as the Fed kicks off its 2-day meeting. 6 consecutive trading days where we had 6 records, but we just barely got there. 0.02% was the gain on the S&P 500 to take you to an all-time record yesterday. We're gaining again this morning, up 0.2, just thereabout for the NASDAQ 100. It's a busy day. We're going to have some of the big tech earnings kick off tomorrow. 20% of the S&P 500 will be reporting this week. For the bond market, it is also very steady. We're going to get a Fed decision tomorrow, so not a lot of change this morning, actually unchanged across the board. Perhaps the real drama, it's what's happening in the euro. The euro falling for a second consecutive day, weaker by the dollar by more than 1.4% over those 2 days. Some real questions about what Europe has conceded in order to get a trade deal done. This is the biggest 2-day decline since April. Let's get you some stocks under the surface this morning. With that is Valerie Teitel. Morning, Val.
Good morning, Danny. Let's start with some M&A speculation. The FT reporting that Baker Hughes, the oil and gas supplier, is looking out to buy Chart Industries at a 22% premium to its equity value. Those shares are up 17% so far in pre-market trade. Let's move on to some maybe more sour news coming out for VeriSign. This is a internet domain supplier similar to that of GoDaddy. Danny, is falling due to some news that Berkshire Hathaway is looking to sell a third of its stake in the company, so that stock down 6.2% in pre-market. Lastly, let's check on a stock over in Europe. I want to talk about Philips. This is the Dutch medical technology supplier. Those shares are up near 10%. Its best performing stock across Europe today. The CEO out with margin guidance, boosting their margin guidance for the full year, and the CEO also saying, Danny, that 15% tariffs is something they can deal with. Danny.
Valerie, thank you so much for that update. We'll catch up with you later in the hour. Also in this hour, we'll be speaking to Marvin Barth of Thematic Markets on U.S. growth. Cayla Seder of State Street also joins us as we count down to the Fed decision tomorrow. Let's get the latest on trade negotiations first, though. The EU and U.S. are looking to finalize a deal that has drawn criticism from the bloc. At the same time, the third round of talks between the U.S. and China are underway in Stockholm. For more, we are joined by Bloomberg's Oliver Crook in Stockholm. Oliver, the first day of discussions wrapping up. Has anything been achieved so far?
Not that we know of yet, Danny. There were about 5 hours of talks yesterday in 2 delegations, one led by the U.S. Treasury Secretary Scott Bessent, flanked by Jameson Greer, the U.S. Trade Representative, and the other by the Chinese Vice Premier He Lifeng, who met for about 5 hours yesterday, beginning in the afternoon, stretching into the evening. And this morning, outside of the Swedish Prime Minister's office, you have the Chinese flag, the American flag, the Swedish flag, and we've just had the full delegations of both sides walk in about 30 minutes ago. So we expect those talks to go for several hours today into the afternoon. We would hope to hear from both of the sides in terms of getting a readout from how those conversations went. And a reminder for everybody, really the deliverable here is going to be an extension of that trade truce that we have currently holding between the United States and China. Remember that trade war escalated where we saw 125% tariffs, basically precluding any kind of trade between China and the United States. That has come down, at least on the U.S. side, to 30%. That is supposed to expire, Danny, on August the 12th. That is what they would like to extend here. They would like to extend that for potentially another 90 days to try to deal with some of the other thorny issues between that relationship. All of that being said, longer term, Danny, we'd like to see, the United States would like to see, China would like to see a framework that works for both sides. But in the world where we have the United States trying to right all of these sort of global trade imbalances that they're seeing with the Chinese are going to be much less willing to give some of the concessions that we've seen. For example, on the European side, the Europeans much more favoring pragmatism. The Chinese are much more concerned with the pride of the situation. They've been building up their economy, their status on the global stage for decades. They do not want to be seen bowing even theatrically to Donald Trump.
Well, speaking of Europe, I want to bring Lizzie Burden into the conversation, who is in Scotland, who has been tracking the EU deal with the U.S. Lizzie, some real questions emerging about just what the EU has sacrificed in order to get a deal done.
Yeah, the price of that pragmatism very evident in the euro, Danny. You've seen it dropping against the dollar yesterday, its biggest drop in over 2 months, and the misery continuing today. You've had industry leaders saying that Ursula von der Leyen, the European Commission president, should have been tougher, that maybe they should have used that anti-coercion instrument that France had suggested. But look, you had division across the EU in terms of how it should be responding, and fear at the Commission, frankly, that there would be a confrontation with Trump that could spill into other areas. So we've heard from EU leaders like the trade chief, Maroš Šefčovič, insisting that this was the very best they could do. Frankly, Keir Starmer has been widely mocked for his softly approach to Donald Trump, Danny. But if anything, this weekend showed its value. He, of course, got 10% tariffs against Brussels' 15%. And if Starmer, while he's talking to Donald Trump here in Scotland, succeeds in securing zero tariffs for steel, compared to the 50% tariffs that Brussels and the rest of the world are facing, maybe you would see that as a win. Starmer wants to carve out for pharma, another area where we're hoping that we get some news in the coming days.
Well, to that point, Lizzie, there had been a lot of celebration, especially after the EU got 15% tariffs, that Keir Starmer got 10%. In that meeting with Trump and the UK Prime Minister, what was the readout on it? How successful is that relationship?
Well, many Trump touting that as a Brexit dividend, but mocking Keir Starmer, as I say, for the way that he has had to handle Donald Trump in these meetings. That press conference absolutely dominated by the president, and the president somewhat patronising the Prime Minister in terms of advice on UK politics, saying that you've got to cut immigration, you've got to cut crime, you've got to cut taxes if you want to beat my friend Nigel Farage, the populist leader of Reform, who, of course, is beating the other parties in the UK polls right now. Nonetheless, there were some wins, Danny, when it came to Keir Starmer. He was praised for his leadership by the president on Gaza. The president finally used the word starvation to describe the situation happening there. And he turned the screws on Vladimir Putin, saying that 50-day deadline for a ceasefire, for a peace deal in Ukraine, now drops down to 10 to 12 days. Another area where we're expecting news today. But as things stand, it's all about golf. We've got the president opening his new golf course here in Aberdeen. They came on Air Force One from the west to the east coast last night, and he's teeing off as we speak.
All right, Lizzie, Oliver, thank you so much for your excellent reporting this morning. Bloomberg's Oliver Crook and Lizzie Burden. Let's turn to the view of Wall Street this morning. Marvin Barth of Thematic Markets writes, quote, U.S. growth will continue to outpace consensus expectations. The combination of the One Big Beautiful Bill Act and tariffs provide modest stimulus to the economy, even if some fiscal consolidation from tariff revenue this year. Marvin joins us now. He's founder of Thematic Markets and former chief economist for international affairs at the U.S. Treasury. Marvin, so wonderful to see you this morning. And look, given the EU deal on hand, it looks like we'll have something like a 15% tariff, at least on goods coming into the U.S., not to speak of commodity tariffs, which are higher. U.S. markets, both stocks and bonds, are sanguine about it. Should they be?
Yeah, I think this is overall a positive thing for the U.S., right? The U.S. is getting a winning position across the board. They effectively cut income taxes and raise revenue elsewhere. And while I know that a lot of people get very disturbed by tariffs, from the applying country in this perspective, they're less negative for growth than income taxes. The math of that, the economic theory of that is all actually very straightforward. And so this is effectively a positive for the U.S. economy. It's not necessarily a positive for Europe, which is why we're seeing this reaction in the euro dollar exchange rate.
Can you get more into that, Marvin? Because the Philips CEO is speaking to Bloomberg earlier this morning saying, hey, we can handle a 15% tariff. We'll be okay with that. Can companies in Europe, can the economy handle a 15% tariff, Marvin?
Oh, yeah, I think most of them can, right? Like, remember that margins are typically higher than that in most advanced companies. You know, for commodities, things like that, obviously that's not the case, but those aren't the things that the U.S. is buying from Europe. Actually, that trade tends to go the other way. So, yeah, they can handle it. And remember, the reason why the U.S. is able to do this with country after country after country is that the U.S., at the end of the day, is responsible for 25% of global demand. And so you kind of have to participate in that market.
Marvin, does that mean when we think about long-term consequences, That there is not a risk that trading partners, that EU, that Japan, that the UK start to move away from the U.S. as both a trading and investment partner?
Well, I think that what you're trying to see, or what you're seeing the Trump administration try to do, rather, is to actually pull those things closer together. So they do see a set of imbalances here, and it's not just the trade imbalances, it is really the set of rules. So, there was a lot of talk about tariffs, but, let's remember the U.S. or the EU has a lot of standards that block all sorts of U.S. imports. That's effectively like a tariff, only it's a 100% tariff. So this does go both ways, and I know that right now the EU is smarting, as are a lot of other U.S. trading partners, but I think as time goes on, these will be seen more in the light of actually this is just a leveling up of the imbalance in trade that the U.S. was facing before in terms of its terms of trade with its trading partners.
Marvin, can you just translate all of this into assets? Does that mean risk on can continue at some pace? Does that mean the threat of inflation or a Fed that's unable to cut, that is somewhat relieved as well?
Yeah, I think all of these things, look, as long as we have a continued growth impulse here, and the U.S. has been the leading economy, so keeping that going has been an important point and is going to keep a positive trend in asset markets. From the inflation perspective, so far, we continue to see that inflation is not coming down below the Fed's target, and inflation expectations are elevated. So they're going to be on the sideline. But I think one of the points that we've talked about many times before, Danny, is that I think that they have the wrong view of where neutral rates are. Neutral rates are actually much higher, which is why the U.S. economy continues to do quite well throughout all of this.
Marvin, I want to talk about one of the risks that you have flagged, and that is stable coins. You're concerned that it will raise the risk of an unstable monetary regime. What do you mean by that? What is the risk?
Well, actually, it's more about the risk to unstable monetary regimes. So if you have a country like, say, Nigeria, where you have rampant inflation and a lack of faith in the monetary authorities, you have the potential to see stable coins that are now validated by the U.S. government and anybody can use on their phone effectively turn into an alternative source of money, and those existing currency regimes collapse. Where that, that's not just an emerging market issue. Imagine if we had stable coins as they exist now back in 2011 or 2012 during the EMU crisis. You wouldn't have had Spaniards and Italians switching their accounts to Deutsche Bank. You would have had them switching it to US dollars on their phone, and that would have been a very different outcome for that crisis.
All right, Marvin, we're going to have to leave it there. Just a taste of some of your take on stablecoin. An excellent research note you have on that. We'll have to get more into it next time. Marvin Barth of Thematic Markets. Let's now get you some other top stories that are trending on the terminal this morning. Vitol has handed a record $10.6 billion to its executives and senior staff through share buybacks last year. The fallout of the energy crisis continued to deliver extraordinary returns to the privately held oil giant. The share repurchase is likely the highest payout in the industry's history. The Financial Times reporting that Baker Hughes is nearing a $13.6 billion cash deal to buy Chart Industries. The deal gives Chart an equity value of about $10 billion. The agreement will likely be announced in the coming days. Baker Hughes declined to comment to the FT. And Barclays traders have delivered their best second quarter in 3 years thanks to volatility from President Trump's trade war. The fixed income business brought in close to $2 billion. That's a 26% increase from a year ago. However, the bank didn't change its guidance for the year after upgrading figures in April. Coming up, we get back to our top story, a deadly shooting in New York City. We'll bring you the details next. This is Bloomberg.
The shooter is believed to be Shane Tamura, a 27-year-old male with a Las Vegas address. Mr. Tamura has a documented mental health history. His motives are still under investigation, and we are working to understand why he targeted this particular location.
That was New York Police Department Commissioner Jessica Tisch speaking at a news conference last night. A gunman has killed at least 4 people and himself at an office tower in Midtown Manhattan. Joining us now is Bloomberg's Miles Miller. Miles, thank you so much for joining us. And you've been working tirelessly reporting on this story. Just bring us the latest and what we understand about the motive of this individual.
Right. So this suspect drives cross country, starting in Nevada, what stops through Colorado, New Jersey yesterday. Parks his car right outside of this building, 345 Park Avenue, and gets out in the middle of rush hour traffic with an M4 rifle. He goes into this building, which is owned by Rudin, a large property management company here in the city. And the first person he encounters is an off-duty police officer who's working what's called a paid detail. So an officer in a uniform, but not working at a precinct, and shoots him in the back. And he continues shooting in that lobby. He shoots a security guard. He goes into an elevator bank destined for the NFL headquarters, which is on the 5th floor. But because this is an elevator bank that the buttons are on the outside, he didn't push any buttons. He winds up going to the 33rd floor, which is the headquarters of Rudin Management. And when he's in that part of the building, shoots another person who is an employee of Rudin, and then ultimately turns the gun on himself. He's in reporting that we've gotten overnight is that he had a letter, handwritten letter in his pocket, in which he says this is all about CTE, which is a chronic condition that football players get, and you can only really study it after they die. You have to search, go through their brain, and you see the signs of it. And he believes that he was hit so hard during his time playing high school football that that's what led him to come to NFL headquarters and sort of try to enact revenge against the NFL. He said they haven't done enough on CTE.
This is a large office building, and anyone that has to go through these buildings knows that there's often robust security, that there are multiple points of checks to make sure that the people who are in the building are supposed to be there. You mentioned in broad daylight, this man walks in with a rifle. Is there a question to how this was even able to happen, that he wasn't stopped earlier? Right.
It's sort of a difficult position. You walk. This guy walks in off of traffic on Park Avenue. The offices are still bustling with people. Unless there are police officers with long guns outside of all of the finance firms and the firms on Park Avenue, it's really difficult to stop the threat, especially when he winds up shooting an officer in the back. Now, there were 2 police officers on site. It's just unclear how he didn't encounter one of the other officers.
And obviously a huge tragedy, Miles. What do we understand this moment about the victims?
Yeah, one victim we know is a Blackstone employee. Another victim, the first victim, an officer, 37 years old, expecting his child, his next child, in about 4 weeks' time, was killed working his off-duty employment with Rudin, trying to make ends meet for his family. You have a security guard shot as well. You've got a Rudin employee shot as well. It's going to be a very difficult day over there. How do you return to an office that was a scene of so much carnage? And if you work at any of the firms in that neighborhood, whether it's Jeffries or Citadel, obviously JP Morgan down the street, what do you tell your employees about their safety as they go into these firms this morning?
Miles, thank you so much for bringing us this and all of your reporting throughout the night. Really appreciated it. An absolute tragedy. That is Miles Miller, and you are watching Bloomberg TV. You're watching Bloomberg Brief. I'm Danny Berger in New York. Time for your front page news in the front of many papers this morning. And the New York Times leading with the shooting in Midtown Manhattan. The 27-year-old from Las Vegas walked into a Manhattan office building that houses Blackstone, the NFL, among others. Bloomberg reporting now suggesting that the gunman had a manifesto claiming he had CTE and was specifically targeting the NFL offices. Next, the Financial Times this morning reporting that staff at the ECB have accused President Christine Lagarde of running an unaccountable legal fortress. The central bank has been called anti-democratic in a letter to Lagarde as seen by the FT. And on the Washington Post, a new whistleblower coming forward to challenge the federal nomination of Emil Bove, a top DOJ official who used to be President Trump's attorney. The Post claims to have reviewed evidence brought forward by the anonymous whistleblower. Bove was nominated in June. All right, a quick check on the euro this morning because it continues to fall for a second consecutive day, lower by 0.1%. It is trading at 115, the weakest two-day run since April of this year, shortly after Liberation Day. A real question being asked now, does the EU have standing after this deal? In other words, did they concede too much? You can see it in the reaction from the European car makers that initially rallied after the announcement of a 15% tariff, but then began to reverse. Coming up, it is a whole lot of earnings, a whole lot of data. We're going to get both JOLTS and consumer confidence data. That's coming up later this morning. Equity markets, little changed alongside bond markets ahead of that data. Will we get any sort of reaction? We're going to push ahead with Cayla Seder of State Street. That's coming up next on your Bloomberg Brief. It's 5:30 a.m. in New York City. Good morning. I'm Danny Berger with your Bloomberg Brief. Here's what you need to know on this Tuesday. An evening of fear. A shooting in a Midtown Manhattan office building kills 5, including the gunman. Locking it in, the U.S. and EU rush to finalize details of their trade deal. Talks with China are still ongoing. And investors await the latest JOLTS jobs data as the Fed kicks off its 2 days of meetings. A 6 record in 6 days, but a very quiet record. We got there yesterday with 0.02% of a gain on the S&P 500. Breath was not so good, but all the indices rallying in the pre-market future session this morning, up 0.2 for the S&P. NASDAQ goes up 0.4%. The bond market basically unchanged everywhere you look this morning. There's a pretty soft 5-year auction yesterday that moved yields higher, and they stayed higher post that auction. Perhaps some of the real drama in the euro this morning, weakening for a second consecutive day. Some real questions about what Europe sacrificed to get a trade deal done. The euro falling in its biggest 2-day slump since April. Steve Englander of Standard Chartered writing that for $100 worth of goods that Europe used to sell, it now needs to sell it at $123 to achieve the same revenue, and that is a significant competitive shock. Let's get some moves underneath the surface this morning in the pre-market. With that is Valerie Teitel. Hey, Val.
Good morning, Danny. Let's start with some speculation of M&A. The FT reporting that the oil and gas supplier Baker Hughes is out with a bid for Chart Industries, a $13.5 billion bid for the company that values Chart Industries 22% above its market value, with Chart Industries rising nearly 14% in pre-market. Investors are cheering this M&A speculation. Let's move on to the auto industry. We got an update from one of the big three, Stellantis. Those shares are falling 3.5% in the pre-market, with their warning that the company could take a 1.2 billion euro hit from tariffs in the second half. Also guided for margins to be in the low single digit. Lastly, let's end on some good news on tariffs, and that is in the healthcare space over in Europe. Philips, the best performing stock in the Eurostock 600 this morning. This Dutch medical equipment manufacturer, giving a boost to its year-end guidance. Also, the CEO saying, Danny, that 15% tariffs are something the company can deal with. Danny.
Valerie, thank you so much for that and for your work this morning. Now, after inflation expectations initially crashed post-Liberation Day, they've been creeping higher. Now, 10-year break-evens, which you can see there, sit just short of the highest level since the Fed ended its rate hike campaign. Cayla Seder of State Street says she's watching the measure, writing, quote, "They are still within the higher end of year-to-date ranges, but should the direction of travel continue, it will make the Fed's justification to cut rates more complicated." I'm pleased to say Cayla joins us now. She is macro multi-asset strategist at State Street. Cayla, does that mean we're maybe even having a premature conversation talking about when the Fed is going to be cutting this year?
Hi, Danny. Thanks so much for having me. You know, I do think when we look at the data, both on the inflation side and on the labor market side, you know, it looks like the economy doesn't really need to be stimulated right now. The economy really isn't saying overall we need rate cuts right now. And when we look at those break evens and we look at those inflation expectations, it does look like the direction of travel is moving higher. And so that does make it harder to justify a cut, certainly in July, but even in September.
The problem is, Cayla, there is likely to be dissent, maybe even two, in the Fed decision this week. The first time that's happened since the 70s, since the 80s, when it was more common then. If this is pressure on Jerome Powell to cut from various Fed members and the White House too, how do you expect him to handle that pressure if, as you say, there is a risk of inflation expectations moving even higher than they are right now?
Yeah, I think Chairman Powell has certainly been steadfast in his messaging. He's really said, we're data dependent. And then when we look at the most recent FOMC presser, what we see is that, the Fed views the labor market as solid, and there still are upside risks to inflation. And so I think the message that we'll get from Powell is that, it's really the data that matters, because that's been the consistent message throughout this entire cutting cycle so far.
So, Cayla, if we don't get the cuts, are they necessary to continue this bull market in equities, to continue the all-time highs? Or if it is a continued Fed that pauses, does the rally take a breather?
I think the rally can continue for two reasons. First is that when we do look at appetite for credit has started to improve really since the first cut last September. And so that tells me that there is stimulus in this economy. The second is that when we look at what's been driving the rally, we have seen a lot of that still comes from tech, and a lot of that still comes from parts of the equity market that have proven they can still outperform even with rates sitting where they are. And of course, we'll get tech earnings this week. And the outlook is that they still have to beat a pretty low bar. And so, I still think that can drive this equity rally higher for now.
Cayla, it is a pretty crazy week. You've just reminded me there with tech earnings coming up tomorrow, but we're also going to get jobs data. We have that Fed decision. We also have the deadline of reciprocal tariffs on August 1st. What to you is going to be the biggest driver this week? What is most important that you're watching out for?
I do think the labor market data is going to be the most important data this week. Even if we do see a slight uptick in unemployment, or even if we see slightly lower NFP gains than we had the prior month, the expectations right now still indicate a healthy labor market. If that starts to shift, if there are big surprises, I think that will end up being reflected in expectations for the Fed moving forward. But if we do see the data come in as expected, I still think that means we could push out expectations of a cut beyond September.
Well, heading into that, Julian Emanuel of Evercore calling markets right now a frothy macro brew in front of a moment of truth with the earnings week in hand too, Cayla. You said earnings, this market can continue at pace with the gains. Could anything disrupt it this week?
Certainly. If labor market data does come in weaker than expected, that could be problematic, as well as, if there is continued trade, if we see signs that trade negotiations for some reason cannot continue, if deadlines are passed and not extended, I think that could certainly put some trepidation in the market. But for now, fundamentals still remain strong, and so what that would ultimately mean is that I do think we could see a buy the dip opportunity overall if we do see some trepidation this week.
In the deals we've seen so far, Cayla, just this week with the EU, it does seem that Trump was able to, let's say, strong arm the EU, that the U.S. didn't make many concessions in order to get a deal done. Cayla, is what we've seen a 15% tariff on the EU with commitments for investments into the U.S. Does it change at all your point of view when it comes to European assets?
We've had a very, pessimistic view on European assets, an underweight view on European assets for a while now, and this certainly supports that. I would say, when we look at what drove the rally in European assets earlier this year, it was very concentrated. And then additionally, when we think about European fundamentals, they have been consistently weaker than US assets. And so, this trade deal also is a headwind to European assets, and that kind of just bolsters this view we've had since the start of the year.
Cayla, we're going to have to leave it there. It is always a pleasure to speak with you. Thank you so much for joining. Cayla Seder of State Street. Now let's get back to our top story this morning. There's a deadly shooting that unfolded yesterday in New York City.
The shooter is believed to be Shane Tamora, a 27-year-old male with a Las Vegas address. Mr. Tamora has a documented mental health history. His motives are still under investigation, and we are working to understand why he targeted this particular location.
Joining us now is Bloomberg's Miles Miller, who has been up all night reporting on this story. Miles, thank you so much for joining us. What do we understand about this moment as to what unfolded yesterday and what was behind the gunman's motive?
Right. This is a 27-year-old suspect who traveled cross-country, aimed with a motive to go after the NFL. It goes to 345 Park Avenue, 51st Street and Park Avenue here in Manhattan, parks his car in the middle of busy Park Avenue and pulls out an M4 rifle in the middle of rush hour and goes into this building. The first person he encounters is an NYPD officer who didn't even have a chance. He was ambushed, shot in the back, and he continued shooting in the lobby before he made his way to the elevator bank. And when he did, he encountered a woman he decided not to shoot, but gets in that elevator. He rides all the way up to the 31st floor and then past there to the 33rd floor, which is occupied by Rudin Management. He was looking for the NFL, but instead he found a property management company, shooting in the hallway, shot one employee, and then ultimately shot himself.
You said he was looking for the NFL. Do we understand why?
Yes, he believes that he is a person who has CTE, which is a chronic brain condition that happens to a lot of people who play contact sports, mainly people who play football. We know he played football in high school, and he believes that he had been hit so many times that he was suffering from the effects of CTE. Now, the one thing about this condition is that it is only able to be studied once someone dies. And so in his pocket was a handwritten note that said, to please study his brain. And that was the reason why he carried out this attack.
This attack also happens months after an executive was also gunned down in the early morning hours in New York City. With this incident as well, is there a rethink going on right now in terms of security of New York?
Certainly, office security is something that is going to be looked at again, right? Here you have an incident where, with the United Healthcare shooting, that was something happening at Investor Day, right? The suspect in that incident, Luigi Mangione, didn't go to Minnesota to carry that out. He came here to New York. You have another incident where there's a young man who feels that he's been slighted by, a company or by an organization who also has chronic pain and is trying to enact revenge against something that he says they're not taking seriously. He said the NFL wasn't taking this seriously and he could not fight the NFL. We know that corporations writ large have been asking for more security. The NYPD has a SHIELD program where they work with private industry to make sure that they have paid detail officers and have visits by counterterrorism. But that posture is certainly going to change. You're talking about an NYPD commissioner in Jessica Tisch, whose family runs the Lowe's Corporation. So she understands that how important it is to have increased security at your corporation.
Miles, thank you so much for your reporting this morning. I know you also have a busy morning ahead of you, so we'll let you go. Miles Miller, thank you so much. This is Bloomberg.
He's going to consider a few deals. Of course he will. But basically what he's going to do is he's going to set the tariff rate for everybody and do that by the end of the week.
U.S. Commerce Secretary Howard Lutnick there speaking to Fox News yesterday evening. Let's get to the latest on the trade negotiations, where the EU has drawn criticism over its deal with the U.S. Both sides are still racing to finalize the details. Meanwhile, the third rounds of talks between the U.S. and China are underway in Stockholm. For more, we're joined by Bloomberg's Brendan Murray, who heads global trade coverage for us. And Brendan, initially a 15% deal from the EU. Assets rejoiced. You saw the car makers rally. The euro did better. That started to reverse. Is there a real question now as to what the EU conceded in order to get a deal done?
Yeah, exactly. I don't think there's anybody in any European capital today that's happy about the deal that they signed. There seems to be a sense of resignation that this was the least bad deal that they could get. But there are still a lot of details yet to sort out. The numbers didn't come in as high. The tariff levels didn't come in as high as a lot of people might have expected, given the threats from President Trump. The 30% reciprocal rate was 15%. So there was a bit of relief, but there's a lot of details that they still need to sort out, not least of which are these pledges of energy purchases from the U.S. and just the overall $600 billion in investment that the EU was going to make on top of what it already invests. So I think there's a lot of head scratching going on, asking themselves, what exactly did we get ourselves into here? And there'll be more talks in the weeks ahead to try to nail down some of this fine print.
Right, and even to Politico, some EU officials admitted whether they would actually be able to spend the $600 billion that was agreed upon. Brendan, it's not just the EU deal that was achieved in Scotland. There are also talks underway, as I mentioned, in Stockholm between the U.S. and China. Day one of talks have wrapped up. What are we looking out for there?
So those talks just got underway again for day two about an hour or so ago, and we expect them to hash out issues on export controls. Remember, the U.S. and China are trying to de-risk from each other rather than decouple, as U.S. officials would say. So they're trying to find that area where they can trade on one side, and they're going to restrict trade on the other, and they're trying to find out where that line is between what they're willing to trade and what they aren't anymore, given the rare earths that China controls and the critical technology that the U.S. controls. So they're going to try to figure out where the line is between what they're willing to trade and what they're not.
And meanwhile, Brendan, in the background, there's still other deals that need to be hammered out, be it Canada or be it elsewhere, ahead of a Friday deadline. How are other things moving along?
Yeah, there was word that the South Koreans flew to Scotland to meet with Trump officials over the past 24 hours. There are expectations that we could get something from Switzerland and some other countries that are were close to the finish line. Although U.S. Trade Representative Jamieson Greer said that India, one of the bigger deals, needed some more time. So it's unclear whether they're going to get that one over the finish line by August 1st. On Friday, or give that an extension.
Brendan, thank you so much for your reporting. That is Bloomberg's Brendan Murray. And by the way, President Trump still in Scotland at his golf course doing a ribbon cutting there, thanking the Scottish Prime Minister. I believe we do have some live pictures of that. But yes, thanking his son as well, saying that my son Eric has worked so hard on that. We'll bring you any updates as they might come if he talks about anything other than his golf course. Let's, though, turn to one of the biggest corporate stories this morning in the energy sector. The world's largest commodity trading house, Vitol, gave out a record $10.6 billion to its executives and senior staff through share buybacks last year. That's according to the firm's annual accounts, as seen by Bloomberg. Joining us now is Bloomberg's Julian Lee. Julian, what drove these record buybacks?
Well, Danny, I think it's two things. As the chart you just put up shows, Vitol has had another very profitable year. In 2024, not quite as good as the previous two, but net profits were still sort of 3 times what they were 5 years ago, and that is a big part of what's going on. Commodity traders, Vitol in particular, has done hugely well out of the uncertainty and the market gyrations that we've seen since Russia invaded Ukraine in 2022. They've made huge profits on the back of that. But the other thing that's happened, I think, is we're starting to see a generational shift within the company. The company is owned by between about 450 and 500 of its employees, and as those employees retire, the company buys back their shares. And so what we're seeing is several very senior executives have announced their retirements recently, and I think we're seeing some pretty big shareholdings being bought back by the company. So the share buybacks have outstripped their profits for 2024.
Meanwhile, in the energy space, Julian, there's this FT report yesterday that Baker Hughes is nearing a deal to buy Chart Industries. What does this say about the current state of American LNG that Baker Hughes would be looking at expanding?
Well, I think this is a really interesting deal for Baker Hughes. I mean, Chart is a specialist in cryogenic equipment. This is sort of stuff to keep things cool and cool things down, if you like. A very big player, therefore, in liquefied natural gas, but also in the massive cooling requirements for things like data centers and nuclear energy. And I think that for Baker Hughes, this positions it for these sort of big growth areas. We're seeing huge growth in data centers as a result of the developments of artificial intelligence. We're seeing large increases in the amount of U.S. liquefied natural gas at a time perhaps when Baker Hughes' more traditional industry of oil and gas exploration, it's not going into reverse, but the growth is certainly slowing. In the US, it may even peak, and so I think this is the steps it's taking to secure its future in the new wave of energy investments going forwards.
Julian, thank you so much for that. That is Bloomberg's Julian Lee on the latest in the energy sector. Coming up, we're going to get you set up for your trading day. There's plenty of earnings to watch out for. That includes Boeing's second quarter results. We'll break down your trading diary next on Bloomberg. Let's get you set up for your trading day on this Tuesday. First up, Boeing, PayPal, United Health, and UPS are all among the companies reporting before the bell this morning. Then after the market opened, 10 a.m., we'll get JOLTS data and Conference Board consumer confidence. Then finally, after the market close, we will see more earnings. This time they will come from Starbucks and Visa. Now, some individual movers in the pre-market this morning. Stellantis, that is extending its post-earnings decline down 3.2%, seeing a $1.4 billion hit from tariffs in the second half of 2025. Baker Hughes, we're just speaking about this with Julian Lee. It's nearing a $13.6 billion to buy Chart Industries. Again, the FT reporting that Chart Industries gaining some 16% this morning. Finally, VeriSign, those shares declining 6.2%. Berkshire Hathaway is seeking more than $1 billion for its stake in the company, so those shares moving lower. Just want to leave you with a picture of what the euro is doing this morning because it is declining for a second consecutive day. Steve Englander at Standard Chartered pointing out that with the new tariffs, $100 worth of goods sold by Europe now needs to go for $123 in order to get the same amount. By the way, United Health second quarter earnings just out. Looks like second quarter revenue just barely beating. We'll break through some of those numbers in the coming hours. But for now, that is it for Bloomberg Brief. Surveillance will take things from here. You're watching Bloomberg.